Brian, how does your tax return relate to your overall financial plan?
Well, generally it doesn't for most people because we have a problem with the licensing. So your typical financial advisor is not licensed to give income tax advice, and your typical CPA is not licensed to give investment advice. And so you have this great tool in the middle there called your tax return. I can look at a tax return and see all kinds of things that other people frankly don't see. Now, one of the reasons I wanted to talk about this is because there's a lot of investment advisors on the radio or investment advisors out there that talk about how they help with your taxes and your tax planning. They have all this help, and I'm thinking to myself, okay, let's check into this, and find out later that they don't even have a CPA on staff, and even if they do, all they're doing is preparing a tax return, or they don't even have any of that stuff. They're just kind of faking it. They're not licensed to give income tax advice. They probably shouldn't be doing that. And so I'm thinking, well, I've got 35 years experience myself. I have a CPA firm. We are licensed to give that kind of advice. Now, the question is, what can you pull from a tax return? There's a couple of things that we can do with a tax return. One is we have a software program that's a tax overlay program that will identify limits and minimums and marginal rates and opportunities, carry forwards, all this kind of thing that we can look at that the computer can spot and pick out. Now, there's a secondary review. This is a person that's both a CPA and financial advisor. Myself, in this case, I can look at a return and go, all right, I see some things here that you don't see. And so that's what I'm talking about when reviewing a tax return as it relates to investment planning opportunities.
Do you have financial planners here who are also CPAs?
Yes, we do. And even the financial planners here who are not CPAs, they have access to the CPA firm. And so we might very often, and I don't even prepare tax returns anymore. I'm out of that piece of it. I know the rules and all of that generally, all the planning opportunities. But if I see a situation, I might go, all right, I want your tax return. I'm going to give it to one of my accountants. They're going to run some what-if scenarios. What if we do a big Roth conversion? What if we sell this asset? What if we do a partial 1031 exchange and hold some money back to offset some capital losses, et cetera, et cetera? We can do the what-if scenarios, and as we see opportunities, I can often spot those opportunities just looking at a tax return. Certainly they come up when we're reviewing a financial plan, but because of our tax background, not only income tax, over a multi-year period, but a future estate tax planning and so forth can be a part of that analysis too. So all of this can interplay, but it can't interplay if that's not your profession. And unfortunately, we have a lot of folks out there saying it kind of is when it probably isn't.
Brian, can you give me an example of where you looked at a tax return and saw something that someone else did not?
Oh yeah, it happens a lot, and I do training on this for other advisors. I remember I put together a mock tax return, and I saw, I left in there all these little breadcrumbs in there, and we reviewed it together. It was a really good exercise, doing it with other advisors, showing them kind of some of the things I could see. Maybe I saw a bunch of tax-exempt bond interest, and I might ask, well, do you want to be in bonds? Do you think rates are going up? Yeah, rates are going up. Well, you may have lost money on that investment last year. Is that something you really want? No, it really isn't. Okay, well, there's an opportunity to take a look at that. I might see 3 different rentals on their thing, and one doesn't have any expenses. Oh, that's a triple net lease. And I see that their cash flow is really good. You're going to want to hang on to that because that one's easy. But I might see that the other 2 have a lot of repairs. I say, is this an older property? Yeah, it's 50 years old, and I bought it 20 years ago. When it was 50 years old or whatever. Is this something you want? Well, it has really good cash flow. Well, not according to this tax return. Oh, yeah, yeah, you're right. I mean, I have decent rents, but I have so much going out on it that I end up with nothing at the end of the year. Yeah, you might want to do a 1031 exchange into passive real estate using a Delaware statutory trust. And they go, oh, my income would go up and I don't have to work as hard and I don't have to worry about it? Great idea. I mean, these are just a couple of examples. I could go all day long on things that when you're looking at a tax return, they just might jump out at someone that has been a CPA and a financial advisor.
Brian, thanks for telling us more about missed tax opportunities.